goes back down, then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners or shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money, money, money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to philsgang.com, my podcast. My name is Phil Grande, CEO of Phil's Gang, a 30-year stock trading education group. Now, Powell made a huge mistake. I said about 2 weeks before he made his decision to cut rates into inflation, I said, I believe that the yields are going to go the opposite. The same thing that happened a year ago when we did the 50 basis point, and the same thing that happened in 2007. I don't think the yields are going to go down. Now, the yields did go up. Now, the day he cut, just like in 2007, everybody was happy and people were glad the market's going up and yields are coming down. But then the yields turned around the next day, like happening now. And then eventually in 2007, they had a crash. Now, we're not allowed to talk about crashes anymore. They renamed them into what they're calling repricing or repricing inconvenience. You won't hear them say crashes anymore. It's unbelievable. So the problem with the yields going up, or not a problem, the bond market took over and said, look, Powell, if you're not going to do what's right, we're going to do what's right. You have to raise yields, interest, going into inflation. You're not willing to do it, so we're going to do it. That becomes a problem. One problem is this, is that Wall Street works on fundamentals. So they've been trained to, if you have a stock market and you have a falling yield, then you buy growth stocks like tech stocks. If you have a yield going up, they're going to take your money and put it into value stocks, like, for example, Coke or Pepsi or Nike or McDonald's. So Wall Street right now is trying to shift around. Well, wait a minute, I got to take my clients, take them out of their tech stocks in the 401k, and I got to shift them over to Pepsi and Coke and McDonald's and Johnson & Johnson because they follow fundamentals. So that's one big problem. But the real problem is this. Can they keep the stock market rallying using, again, remember, this whole market has been rallying on one thing, or three things actually. Lower interest rates, okay, but first of all, been really increased money supply. With that increased money supply, they've been able to shove money into the banks, and the banks would push the money into CEOs so they could do stock buybacks. So as long as we had an increased money supply, they could keep shoving money through the banks to the CEOs to keep the stock market going up. Also, as long as we had an increase in money supply, they could keep funding the most important margins, keep lending money to traders who are going to borrow margins. So everything is money supply. If that money supply keeps going in, and they can keep doing stock buybacks, and they can keep funding people who want to trade on margin, then the market can go up regardless that the yields are going the wrong way. But we don't know that yet. And it's amazing if you really think about the market since 2008, 2009, it's always been about QE. It's always been about stock buybacks, right? But when they got to 2012, from 2009 to 2012, they didn't want to say they were going to continue with stock buybacks or QEs. Let me explain. The QE, when they started out with QE in 2009, all that is Treasury prints a bunch of money. They give the money to the Fed. The Fed gives it to their 5 biggest banks, and their 5 biggest banks go in and buy 10-year Treasuries. Now, the idea behind that is the Fed, who controls their own rate, can push the rate down to 0. They can't touch the 10-year. They have no control over that. But they can control it in a sense, as long as the Treasury prints some gobs of money and they take the money, give it to their banks, the banks go and they buy the Treasuries, and then the Treasury yields drop. That helps because now your mortgages are going to be at lower interest rates, your credit cards, your automobiles, all of that. That's what they did. So after the 2008 crash, 2008, 2009, remember what happened. It was Bernanke and Obama who decided, let's do QE, what I just explained. Now, they said they were only going to do it for about 3 months, 6 months. But then they saw it was working, so they kept doing these stock buybacks. That's how they get their money, right? Printed Treasury goes to the Fed shoves it in the banks, goes to the CEOs. But they had a problem because they knew at that point that the stock buybacks create a bubble, because the stock buybacks, I explained many times to folks, it's bad because all they're doing is when they buy their own shares back, there's less shares available to the public. So what that does, it pushes up earnings and it pushes up the stock price, called unearned increment. They didn't do anything for it. What do they usually do to get an increase in earnings to push up your stock price? Increase sales, but they didn't have to do that. So from 2009 to 2012, they're getting worried because remember, that is inflation. When that Treasury keeps printing the money to shove into the banks to get to the CEOs, that printing is inflation. So they saw inflation going up. They said, we can't let people know that we're going to continue to do this. So what we're going to do is we'll keep increasing the money supply. So let's keep increasing the money supply. We'll say that QE is over, and we'll just keep increasing the money supply, and we'll keep giving money to the CEOs to buy their own stocks. And take a look at this chart. So if you look at, it's kind of crude, I did this quick before I got on the air, just to show you. This is the money supply right here, this dark blue line. And if you overlay a chart of the S&P, you can see here was the dot-com right there. Here was the housing con. But notice how to get out of that mess, they're pushing in money supply. All the way up, they keep pushing it up, because remember, they're trying to push this market up. Okay, that's their whole goal, to get Wall Street rich again. So now they go up 2018, we get a little pullback, and now they got plenty of money supply to shove into the banks to do more stock buybacks, and then bam, we just have a big rally right up to 2020. We have COVID, drops again. Now they push in more money supply. And then right up, let's just go right up to where we were here in February. I think it was February, where we had this last drop of about 30%. That's that April low. So the point I'm making is that it's this increase, without this increased money supply, the market wouldn't go anywhere. But it's this increased money supply. Now we got to find out, are they going to continue to take this increased money supply now, regardless that the yields are going the wrong way? And by the yields rising, they should be buying value stocks instead of tech stocks. But will they push this money supply up, keep pushing it up? And where's that money go now? Remember, it still goes over to stock buybacks. Now remember, in the last 10 years, Apple alone had 735 billion. Remember, money was printed, 735 billion was printed from the Treasury, goes to the Treasury, and from Treasury it goes to the banks, and the banks it goes to Apple, and there you are, 735 billion. So the key is, are they going to continue to do this? If they continue to do this and keep pushing the money supply up, then what's going to happen? The same thing that's been keeping this market going up all along. You got again your margin, debt, that's going to be taken care of, okay, no problem there. Stock buybacks are going to be taken care of, no problem there. So we got to, and we also, the third thing is the margin debt. So as long as you have margin debt taken care of from money supply, stock buybacks taken care of from money supply, the market should just continue to go up, regardless if the yields are going the wrong way. Now remember, the bond market turned around and said, no, you're wrong. You're very wrong, Powell. It's not, Powell came out and said, well, if the problem with corporations, to get them to hire people, we just got to cut rates for them. If we cut rates for them, they'll start hiring again, and it'll take care of our terrible labor market. No, he is wrong. That's not the reason why they're not hiring, because of rates. He's wrong, and he knows he's wrong. So that's not what's going on. The corporations, you can cut their rates today. They are not going to hire. Because it's not rate cuts they need. They need confidence in the middle class. It's the middle class. 60% of our households are middle class. These are people between 35 years old, 48 years old, that make a combined income of about 75,000. Those are our consumers. Without them, we have no country. We have no consumption. So those people are in the worst shape they ever been. We know that. They're delinquencies and credit cards and automobiles and mortgages and everything else. They have no money. They're tapped out. So the corporations are saying, wait a minute, if you give us a rate cut, we're not going to hire anybody, because our market, the middle class, they're broke. In fact, bankruptcies went up 24% since January on this group. In fact, companies aren't building inventory. They have no sales. So corporations bankruptcy since January has gone up over 40%. So now the problem comes this. What stocks do you buy? That's the whole problem, okay? So, and the question's going to be, okay, let's go back to here. The question's going to be, do I buy, if I go look and I take a look at my let's go up here, let me put my glasses on. All right, I'm supposed to be buying value stocks. So let's put up value stock ETF, SCHV. Look at this. Not doing much, is it? Now you would think, because yields are going up, that everybody would be buying value stocks. Rising yields, you buy value stocks. Now, the other thing with rising yields that's a problem, it pushes stock prices down. It pushes stock prices down. So you have falling stock prices when you have rising yields, because rising yields is rising interest rates. So to say that let's go into value stocks when you still have tech stocks, here, take a look. When you have tech stocks who aren't supposed to be going up, because tech stocks, remember, they love low rates, low yields. When you have falling yields, growth stocks, our tech stocks take off. But look what's going on. ARK, look at it. Look at it today, going up. Mags, the Magnificent Seven, today, going up. Google, going up. Tesla, yeah, about even today. Tesla's about even. So my point is this, that they're trying to sell us one thing, a big lie, that this is a good thing to go in and cut rates. The bond market agrees with me and a lot of other people. No, Powell, why don't you tell the truth what you're trying to do? You're trying to keep this bubble going. You're working for Wall Street. You want to see more stock buybacks. That's what you want, to keep the market going. Before you, Bernanke was doing the same thing. It's the stock buybacks that is building such a bubble in the market. So if someone was to ask you today, well, we got a problem. Yields are going the wrong way. They're going down. And we saw in 2007, we had a crash. Oh, I'm sorry. Not a crash. Not a crash. Sorry. No. Inconvenience. A price correction inconvenience. So are we going to have another inconvenience? Price readjustment inconvenience. That's what they call them. Price readjustment inconvenience. Are we going to have one of those again? So you got the big institutions that are playing on the outside. Now, the big institutions have been doing this. They've been shorting the treasuries. So this is another big problem, huge problem for the market. So if you go look at the treasuries, they're shorting them. Here, take a look at the 10-year right here. They've been shorting these treasuries like crazy. So now they're thinking, before the rates went up yesterday or today, they're saying, I'm going to short the hell out of these treasuries. But now look at the money they're losing.
30 seconds.
So if they have to cover their positions. They got to cover those short positions. How long can they stand this?
10.
If they do, the yields are going to go through the roof, and what will happen? I'll tell you when I get back. Join my gang, philsgang.com.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang podcast. Now, so the question is this. We got to understand, the question is the market going to continue to go up even though yields are going down? Is the market going to continue to go up when we have massive amount, institutional money? They've been buying gold and they've been shorting treasury yields. They thought the treasury yields would go down. Now, they're wrong so far. So the point is they're going to have to buy those back. They got to stop shorting. That means yields will shoot straight up. And that could take the market straight down. So the question comes, can they continue the stock buybacks? So if they can continue the stock buybacks and continue, again, supporting the stock buybacks, you can see them right here. Here's the stock buybacks. So I mean, tremendous amount of money's been going into these stock buybacks. Look, $100 billion in Apple alone. So even if the yield goes up much further than where it is now, because the institutions have made a wrong decision, they have to buy their stock back now, and yields are going to go up. That means interest rates are going to go up. That means stocks will come down. But if they can continue to increase the money supply to increase stock buybacks, but there's still a problem. Remember what Powell's saying. Powell's saying, oh, I got to cut rates so I can give manufacturers and corporations a break, and then they'll start hiring. Because he thinks that if you turn around and start cutting rates, the consumers are going to start spending. And the most important consumer is the middle class between 35 and 38, or 35 and 48. They do all the spending. But they're not spending. They're broke. Now here, take a look. Now, we're being told a lie every day. We're being told by all these fake business news network stations like CNBC and the rest of them. Let's see if you can get me my give me my sound effects up there down. So I'm gonna play this for you because they truly believe and tell us every day how strong the consumer is. Now we know that's not true. If that was true, why have we had an increase of 24% in bankruptcies with the consumer? It's just not true. So the bond market are saying to Powell, hey, you're dead wrong, man. If you keep raising rates, cutting rates into inflation, we're going to end up with one hell of a mess. We're going to end up with a real collapse in the market. So I want to show you something. So we're told every day, let me get it for you, how great the economy's doing. Here, listen to wealth. How consumers are doing. Here,
wealth has just absolutely exploded over just since 2019. The wealth of all of the Americans has gone up in just 5 years by $52 trillion. That is a 44% increase in total wealth.
Do you hear what he said? Wealth is going up by all Americans. All Americans. No, that's a bold-faced lie. Here, let me show you. First of all, we have, again, as I showed you, we got a real problem right there with the wealth, okay? And let me put this back here. Does that look like, sorry about that, I had to reline this chart up. Does that look like he's telling the truth? Here is red. This is the wealth of the middle class. This is the wealth that manufacturers, merchants, everybody depends on, or there'd be no country, between 35, 48. So there's their wealth going down. Here is the wealth of the 1%. Now remember, the middle class makes up 68%, almost 70% of U.S. households. They're getting crushed. But look who's making all the money from the stock market, right here. Look at that, the top 1%. So how's that going to work out? This guy is telling us, boy, they're strong. Look at the wealth they've been creating. Everybody's creating wealth. This is what they've been selling us. This shows right here they're full of crap. This is a lie. This is a lie. So the wealth gap is terrible. And if you look at housing, the wealth gap really shows up. An average house around $425,000. A person's got to make $125,000. But the average person household, as I said, 68,000 households only make $65,000, $75,000. They can't afford a house. And the median price house in this country is about $4.25. They can't afford it. They can't afford the $3,000 a month payments. So if the country's doing, if everybody's got this wealth, then why can't people go out, the middle class, and buy a house? Because there's a wealth gap, about $53,000. They're not making enough money. How's that happen? How did this all get away? This inflation. How did houses go from $260,000 to $425,000? It all goes back back to, again, COVID. When COVID arrived, they decided to put it into a big welfare program. This was going to help during the elections. Big welfare program. Let's print $6 trillion, give it to the people, send them checks. They don't have to go to work. And then what happened? As I said the other day, if you had a restaurant, you were paying a dishwasher $10,000 a year, $25,000 a year, you now had to pay him $50,000 a year. Inflation went nuts with wages, went crazy. You couldn't get help. Nobody could get help. So here's the real thing. If the stock buybacks keep going up, and that will only happen, of course, if we have the money supply going up, right? Now, I just don't see that happening. So let's take a look at this. How can you tell if the country's in trouble or not, other than looking at the middle class wealth, which we just showed you, and you can see that it's 2 to 1, for God's sakes. The 1%, that's just even low. It's all going to the rich. Now look at this. This is heavy truck sales. When you're in business, this is what you look at right here. This is the truth. You don't turn on CNBC. You don't turn on Bloomberg. You look at truck sales, okay? Now, if you go back to 2008 or 2001, let's go back to the dot-com era. So 2000 to 2001, look at the truck sales. Collapsed. Then what else collapsed? The stock market collapsed right after. Let's go to the housing financial crash. Look what happened. How you had heavy truck sales collapsed. And soon after, what happened? We had the 2008 crash. Here we are today. Look what's happening. We got trucks, sales, the bottom's falling out. It's lining up with 2008, and it's 2000, 2001, and 2008. It's lining right up perfectly. But again, if they can keep printing enough money, and they don't care how big a bubble the market is, nobody cares about valuations anymore. As long as Wall Street is making money, they'll let this market keep going up. They'll let it go. We should be down right now. I told my members the other day, when Powell made his announcement of the rate cut, the market should have dropped at least 1,000 points, at least, if not more. When those yields started to go up, believe me, the market should have just collapsed. It didn't. Now, so let's take a look at this. So here's a great thing to follow. Always follow the truck sales, heavy truck sales, because like the bond market, it will tell you the truth, okay? The only place you can find truth, okay, for the stock market is, again, in the bond market. Now remember, manufacturing. Manufacturing is a disaster. Look at the manufacturing, look. So what's she think? If you take manufacturing since 2003 February, we've lost 178,000 jobs. 170,000. That's worse, that's below the pre-COVID days, for God's sakes. And also in the last 4 consecutive months, manufacturing dropped by 42,000 jobs. That's the lowest since 2022. So here's the point. We're not going to, you can cut rates all you want. Manufacturers are not going to turn around and start hiring people. They're not going to turn around and start buying materials. You know why? Because the dollar's going up, starting to go back up. That means when you import materials for your factory in the United States, you're screwed. Prices are going up. So nothing is going to happen. You're not going to see anything happen as long as you see this chart where you got all the money going to 1%. And 68% of households are broke. So and it proves with the factory numbers. Look at the factories. Why would you hire? Because you're getting a rate cut? That's what Powell wants us to believe. Well, you give them a rate cut, they're going to start hiring. No, they're not. They don't want a rate cut. They need confidence. Now, there's another place. They lost their confidence in the middle class, but don't forget, they lost their confidence in our government, in our country. Look at the debt we have. Who buys our debt? China, Japan, the UK. They're the biggest buyers. In the last 5 weeks, we've been begging those three, our banks, to buy $250 billion in treasuries. They walked away and they bought gold. So here we got the yields going up, which is a killer. Yields going up, and it's going to go much further if all those people, all those institutions all of a sudden say, man, I'm losing my butt. I got to cover my short positions. Now, they have enough money, they can probably hold on to those short positions for maybe a couple weeks. I don't know. If you start seeing those yields go up, there's a real problem. So manufacturing, everything we're hearing from Powell is a big, fat lie. So why? So where's all this stand? What do you do? Well, if you don't know how to sell a stock short, you really are in bad trouble, because if the yields keep going up and we have a inconvenience of a price reduction, the bubble has been so big because the increase in money supply to take care of course, the margin debt for people who want to borrow money, and stock buybacks. So it's all up to Powell. Does he want to increase the money supply and make sure the market doesn't go down? Now, I would say by next Wednesday or Thursday, we're going to have a good idea what's going on. And when you look right now, nobody cares about what I'm talking about. They're saying, oh, so what? So what, the yields are going up. Who cares? They'll never let the stock market go down. In fact, anytime you talk about there's going to be a crash, you get tremendous amount of hate mail. I've never seen it. I've been doing this business now for over what? Since for years, okay? For years. Been doing it for more than 30 years. And I've never seen people send you such hate mail when you even mention that the market may go the other way. They take it personally. Don't take it personally. Look at the facts. If you see, just don't turn your back on what you're watching. The heavy truck sales is telling you our economy is suffering. Manufacturing is suffering. The top 1% is earning all the money off the stocks. Which stocks? 5 stocks, tech stocks.
1 minute.
So your protection is you got to learn how to sell short. For people who don't know how to sell short, that means they got to trade. They got to buy stocks and trade them to perfection. It's like having a car with no reverse and trying to park it in a parking space. You're going to go to a restaurant, there's a parking space and you only have reverse. You got to take that car with just reverse, no forward, get in your parking space. You got to drive with such perfection. It's the same thing with the stock market. If you don't short,
30 seconds.
and all of a sudden the market starts to correct, start to become an inconvenience, what do you do? So you can't, what are you going to do, buy Clorox and Coca-Cola? No. What you do is learn how to sell short. Even if the market keeps going up because they decide, I'm going to continue to do stock buybacks, we're going to keep printing money, we don't care about our debt, we don't care about we'll keep this market going up. You should always learn how to sell short. That's your protection. Join my gang, philsgang.com, a 30-year stock trading group. Thank you.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
Okay, you're out, Phil.
Those charts were